Hello. Now we are starting with the revision of the joint venture, that is accounting for joint venture. So first we have to understand what is the meaning of joint venture, how it is different than other businesses, how it's different than consignment. Basically in consignment, one party sends goods to the other party and other party has to sell on behalf of the first party, whereas in the other businesses they will sell on their own. But in joint venture what happens is different people come together and they will start a business to carry on certain particular task. They will bring all the resources, and at the end of the day, after completion of that particular task, they will share the profit of that particular task and they will close the business. So joint venture, in simple we can say, joint venture is nothing but a temporary partnership. But the main difference is partnership is governed under a Partnership Act 1932. Joint venture is not governed by any act. Joint venture can be a partnership, joint venture can be a company. So joint venture, based upon what registration you got, what kind of entity registration you got, based upon that the joint venture law will keep on applying. Like for example, if you registered as a partnership, Partnership Act; if you registered as a company, trust. Okay, so basically joint venture is the kind of business in which two parties or two or more people come together and they will bring the resource together to carry on a particular task, and after completion of that particular task they will close the business, they will terminate the business. That is joint venture. Okay, so when it is a partnership business, the agreement between the partners is called as partnership deed if it's in writing. Here the agreement between the joint ventures, the different parties in the joint venture is called as co-venturers. Okay, the parties in the joint venture is called as a co-venturers. So the agreement between the co-venturers is called as MOU, Memorandum of Understanding. In that they will mention what is the profit sharing ratio, how they have to, who has to bring what resources. At the end, if any unsold goods is there, at what it should be valued, any asset is there, at what it should be valued, all those things will be mentioned. Where the profit sharing thing is absent in that, where the profit sharing clause is absent in the agreement, as same as a partnership business, they should share the profit and losses equally. So the parties involved are called as co-venturers. Now the thing comes, accounting for joint venture. How the accounting to be done for the joint venture? For the joint venture, accounting can be done in two ways. One, where the separate set of book is maintained. The other one, where the separate set of book is not maintained. One, where the separate set of book is maintained. Two, where the separate set of book is not maintained. When the joint venture is big, what we will do? Joint venture we will make it as a separate business. For that we will keep one separate accountant. He will keep the record of all the joint venture business. He will keep the record of all the transactions of the joint venture business. Okay, that is when separate set of book is maintained. The next one is separate set of book is not maintained. When the separate set of book is not maintained, each co-venturer will record the transactions. In that also again it will get split into two. One, each co-venturer will record all the transaction of the joint venture. Two, each co-venturer will record only his own transaction of the joint venture. Now coming to the first one, where separate set of book is maintained. This has a separate accountant and he will maintain the books of the joint venture. Here he is going to maintain three accounts basically. What are the three accounts, sir? Joint venture account, joint bank account, co-venturer account. Joint venture account, joint bank account, co-venturer account. Now, sir, what is joint venture account? Joint venture is a nominal account. In which all the expenses of the joint venture will be debited, all the incomes of the joint venture will be credited. I repeat, all the expenses of the joint venture will be debited, all the incomes of the joint venture will be credited. Okay, sir. Including capital receipt and capital payments? See, there is no difference between the, like in the joint venture, the payment or a receipt is not divided into capital and revenue in nature. What is the reason, sir? Reason is, we know that joint venture is a temporary. Joint venture is a temporary. So when the joint venture is temporary, we cannot say for more than one period, less than one period. No, the difference between capital and revenue is capital benefit is there for more than one period, whereas revenue is recurring in nature and less than one period. In joint venture, there is only one period. There is only one period, which means the main concept which is missing is a going concern concept. Joint venture ignores the going concern concept. With what is our agreement? Agreement is that once we complete this task, we are going out. We are going out of the business, which means we know our business is going to come to an end after certain time. So usually what we will do, there is no difference between revenue in nature and capital in nature. Whatever the expense is there, everything will be debited in the joint venture account. Whatever the income is there, everything will be credited in the joint venture account. What is joint bank account? Joint bank account is the account which is opened by the co-venturers together to deal with the joint venture business. Next one is co-venture account. Co-venture account is same like your partner's capital account. Co-venturers account is same like your partner's capital account, because they are the owners of the joint venture. No? Now, in the first set, let's see how the journal entries will be there. Okay. First, when our co-venturers will bring certain money to the joint venture. When our co-venturer will bring certain money to the joint venture, what will be the entry? Entry will be simple. As a joint venture accountant here, what is coming to the business? What is increasing? Our bank balance is increasing. So joint bank account debit. Who are giving? Our co-venturers are giving, just like a capital. So to co-venturers account. Joint bank account debit to co-venturers account. Next, the expenses of the joint venture is paid by the joint bank account, which means in our joint venture there is certain money. No, we are paying the expense of the joint venture using that money. Expense it is, we should debit the joint venture, right? When it is an expense, we should debit the joint venture. So joint venture account debit to joint bank account. Joint venture account debit to joint bank account. Or you can say expense account debit to bank account. Later it should be transferred to the joint venture. So joint venture account debit to expense, which is basically expense getting cancelled, debit and credit. Final entry will be joint venture account to joint bank account. That's why we'll pass only one entry, joint venture account debit to joint bank account. Okay, sir, done. Next, third one. When the joint venture expenses are paid by a co-venturers. So when joint venture expense is paid by a co-venturers, which means certain expense of the partnership business is paid by the partners, in the same way certain expenses of the joint venture is paid by the co-venturer. Now the co-venturer will become what? Co-venturer will take the form of creditors. So on our behalf, on our joint venture behalf, someone is paying. So what will be the entry? Expense we should debit. So joint venture account debit to, whether it's going through our bank? No sir, it's paid by our co-venturer. So what will be the entry? Joint venture account debit to co-venturer account. Okay, fine. Next one is sales proceeds or collections. So when we sell the items, when we sell the goods, or when we provide a service and we receive something, what will be the entry? We will receive, no? So money will come in. So joint bank account debit to sales we can't write. What we will write? It's an income. By finally, if you write sales also, that should be transferred to the joint venture account. So joint sales getting cancelled. So finally, what we will write? As it's an income, we will credit the joint venture account. So joint bank account debit to joint venture account. Okay. But what if our sales has been taken by our co-venturer? The sale money has been taken by our co-venturer. At that time, what we should do, sir? Simple. Our money is taken by someone else. Now the co-venturer will become our debtor. So we should debit them. Co-venturer's account debit to joint venture account. Joint venture account, because it's an income. So we should credit the joint venture account. Fine. Now certain asset or certain goods has been taken over by the joint co-venturers. Certain goods of the joint venture has been taken over by the co-venturer. It's an income again to the joint venture business. So we should credit the joint venture account. And who is taking over? Our co-venturer is taking out. So entry will be co-venturer account debit to joint venture account. Okay, sir. Next is liability. When the liability of the joint venture is paid by the co-venturer, which means they will become our creditor. They are reducing our liability. That doesn't mean that we are not required to pay them back. We have to pay them back. No, they will become our creditors now. So they will become as it's our expense, liability expense, because there is no difference between capital and revenue. So joint venture account debit to co-venturers account, we should credit them, co-venturers account. When there is a profit in the joint venture, debit in expense, credit income. Profit means credit should be more, right? Which means credit balance it is. So credit balance, now we have to debit the joint venture to distribute a profit to the co-venturers. Same like your partnership business. So what will be the entry, sir? Joint venture account debit to co-venturer account. How it will be shared? In their profit sharing ratio, which will be given in the question. If the question is silent about the profit sharing ratio, you should assume that that has been shared in the equal proportion. Okay, profit will be shared in equal proportion if the agreement is silent or question is silent. What if there is a loss? Loss means expense is more than income, which means debit is more than credit, which means debit balance. So as it is having a debit balance, now we should credit it. So what we should debit? From whom we should recover? We should recover it from our co-venturers. So what will be the entry? Co-venturers account debit to joint venture account. Co-venturers account debit to joint venture account. Finally, after doing all the business, our co-venturers should take and go some money, no? Or they have to bring the money, no? Depending upon whether business has to give them or they have to give to the business, their account will be debited and credited along with the joint bank account. Okay, if joint venture is giving a profit and they are eligible for taking out some money, entry will be co-venturers account debit to bank account, whereas they have to bring the money, joint bank account debit to co-venturers account it is. This is first method. Next method is where the separate set of books are not maintained. Where the separate set of books are not maintained. When the separate set of books are not maintained, again it opens scope for two things. One, I mean when the separate set of book is not maintained, how the transaction happens? Each co-venturer will record the transaction in their own books. Each co-venturer will record the transaction in their own books. Now, each co-venturer will record, that's fine. But whether they are going to record their own transactions or they are going to record all the transaction. So two things are there. One, recording all the transaction. Two, recording only their own transaction. So now we will see when separate set of books are not maintained and all the transactions are recorded in the co-venturer's book. First condition, when each co-venturer keep record of all the transaction. That time how the journal entry will be? Simple. Let us assume there are two co-venturers, co-venturer X and co-venturer Y. Okay. Now co-venturer X is supplying the goods. Once he supplies the goods to the joint venture, co-venturer will inform Y that, boss, I have sent the goods to joint venture. So in the books of X, what happens? His material is going out, no? His material is going out. So his purchases is getting decreased. At the same moment of time, as he is maintaining the joint venture account, in joint venture expense is increasing. So what will be the entry? In the books of X, it is joint venture account debit to purchase account. In the books of X, it is joint venture account debit to purchase account. At the same point of time, as Y received a call and he was like, okay boss, you sent a goods now, okay, I am recording it right now. So Y recorded it. Whether it's his expense? No. According to him now, joint venture, it is expense only. So joint venture account debit. And according to him, X will become a creditor of a joint venture, no? X will become a creditor of joint venture. So in his book, he will record like this: joint venture account debit to X account. Fine. Next, let us assume when the expenses are paid by Y. When the expenses are paid by Y, of course, in the book of Y, what it will be? A joint venture account debit to bank account, because he is paying from his bank account. So joint venture account debit to bank account. Whereas in the books of X, whether it's his money, no, it's a money of Y, which means Y will become a creditor of a joint venture. So X received a call and he was like, okay, you spent certain expense, okay, I am recording it right now. So he recorded it as joint venture account debit as its expense to Y account. Done. When the advance is given by X to Y, so one co-venturer is giving an advance to the other co-venturer. So in the books of X, it is Y account debit to bank. In the books of Y, it is bank account debit to X. let us assume bill is drawn by one co-venturer upon the other co-venturer. For example, when the bill of X is accepted by Y, so X is a drawer and Y is a acceptor. So in the book of X it is bills receivable. So bills receivable account debit to Y account. In the Y account it is X account debit to bills payable. Next one is sales proceeds are received by X. For example, joint venture sales proceeds are received by X. So in the X book the money will come. So bank account debit, but it is not his sales to write it as sales. No, it is a sales of joint venture. It's the income of joint venture. Income of joint venture, credit the joint venture account. So cash or bank account debit to joint venture account. Also sometimes debtor account debit to joint venture account. Whereas in the books of X it is X account debit to in the book of Y it is, as X is receiving a money of a joint venture, he will become a debtor of a joint venture. So X account debit to joint venture account. When the unsold goods is taken over by the Y, so Y will take over the goods. So in the book of Y, purchase will increase. So purchase account debit to joint venture account. In the books of X, Y will become a debtor now for the joint venture. So Y account debit to joint venture account. For the profit sharing ratio, profit sharing, X in the books of X portion of profit will be transferred to the P&L, Y's portion will be credited to him. In the Y book, his portion will be transferred to the P&L and X portion will be credited. So joint venture account debit to P&L account to the portion of X, to Y account to the portion of Y. In the book of Y it is joint venture account debit to P&L account to the portion of his share, to X account to the portion of profit of a X. Last reversal entry. Okay, I hope this method also you understood. The last method is co-venturer separate book is also not maintained, and these people are not maintaining the record of everything. These people are maintaining only record which is relating to them, that is their own transaction. If they have done some transaction to the joint venture, only they are writing that much in their books. The other co-venturer are doing something, they are least bothered. They don't receive call to listen that okay, I have sent so much, I have spent so much and all. At the end of the period, each co-venturer will send a document in which he will mention so much is I spent on joint venture. Everyone will exchange and everyone will prepare one memorandum called Memorandum Joint Venture Account to ascertain the profit or loss by taking everyone's account together. Because in each and everyone's book, each and every co-venturer's book, only their transactions are recorded, not all transactions. Okay. So each and every co-venturer will record whatever it might be, income, expense relating to the co-venture. They will maintain one account called joint venture with the co-venturer account. They will maintain one account called joint venture with the co-venturer account. In that they are going to record everything relating to the joint venture. At the end of the period, when they get a document from the other one, when they get a details of account from the other co-venturer, they will prepare a memorandum account by debiting all the expense, including his expense, including the expenses paid by him, also the co-venturer, incomes, including the incomes received by him, also with the co-venturer. There they will ascertain the profit, and that profit they will transfer it to the joint venture with co-venturer account. Listen carefully. Journal entry C. Amount received from a co-venturer in cash or bills receivable. So when the amount is received from the co-venturer, as I already told, we are not maintaining the co-venturer account here. Only one account we are going to maintain separately, that is joint venture with co-venture account. So as we are receiving the amount or a bills receivable, that the entry will be cash or bills receivable account debit to joint venture with co-venture account, as it is relating to the joint venture. Fine. Next one is, if we discount that particular bills receivable, there will be discount. No, discount is nothing but expense. Expense of what? Expense relating to the joint venture. So what we will do, we will debit the joint venture with co-venture account for the discount portion. So usually discounting, what will be the entry? Bank account debit, discount account debit to bills receivable. Here instead of discount account, we are going to replace it with joint venture with co-venture account. So the entry will be bank account debit, joint venture with co-venture account debit to bills receivable account. Okay, sir. Next, purchase of goods. We are purchasing the goods relating to the joint venture, which means it's an expense of joint venture, right? So the entry will be joint venture account debit, joint venture with co-venture account debit. 2, if we are purchasing it on cash, to cash. If it's basis on credit, joint venture creditors account. Joint venture with co-venture account debit to cash or creditors account. When we make a payment to our creditor, also let us assume we are receiving certain discount from them. That discount is what? Income. We have to credit it. But usually when our creditor gives a discount, what will be the entry? Creditors account debit to bank to discount, right? To discount received. But here this discount received is not our discount, it is the discount of the joint venture. So that income will be transferred to the joint venture with a co-venture account. So the entry will be creditor account debit to bank account to joint venture with co-venture account. Now when we are transferring certain portion of a stock to our to our joint venture, so the entry will be our stock will get reduced. At the same point of time, our joint venture expense will get increased. So the entry will be JV with co-venture account debit to purchase account or to goods account. Done. When the payment of expense has been made, when the payment of expense is made, we are only paying the joint venture expense. Entry will be joint venture with co-venture account debit as its expense to bank account as we are paying. Sale of goods, let us assume we are receiving a money relating to the joint venture. Entry will be debtor or bank account debit to joint venture with co-venture account. When we receive a money from debtor, also let us assume we allowed some discount or there is a bad debt. It is the expense of the joint venture, so joint venture with co-venture account should get debited to that extent. So what will be the entry usually? Usually entry will be bank account debit, bad debt or discount account debit to debtor account. Here what it is? Bank account debit, joint venture with co-venture account debit to debtor account. Okay. If we take away certain goods, it will be purchased for us, right? Our expense it is. So we are going to debit our expense, that is purchase account debit to, it is an income to the joint venture with co-venture. So to joint venture with co-venture account. Also when we are entitled to certain commission, which is our income, so entry it will be expense of the joint venture business. So joint venture with co-venture account debit to commission or salary account. As it's our income, we have to credit it. Share of profit of joint venture, how we are going to arrive at it, sir? After preparation of a memorandum. In memorandum, we will take out all the expenses spent by us in the debit side, all the incomes received by us in the credit side, along with all the expenses are spent by other co-venturers, all the incomes spent by other co-venturers, all the incomes received by other co-venturers. Together, this plus this, I mean credit minus debit, we will find out profit. That profit we will divide among all the co-venturers in the profit sharing ratio, and later that portion of profit will be bought by the co-venturers to their account which is maintained in their books, that is joint venture with co-venture account. So the profit portion, how it will be? Joint venture with co-venture account debit to P&L account. Okay. Later if it's a loss, it is P&L account debit to joint venture with co-venture account. Settlement will be what, sir? Finally joint venture with co-venture account balance we will joint venture with co-venture account will be there, no? That we will balance. If it's a debit balance, it will be like our debtor, which means we have to receive. So the entry will be cash or bank account debit to JV with co-venture account. If it's a credit balance, we have to pay. Sir, but the balance in joint venture is a profit or loss now. In this case, it's not. Why? Profit or loss is computed using a memorandum joint venture account, not a joint venture with co-venture account. So entry will be, in case of credit balance, we have to pay joint venture with co-venture account debit to cash or bank account. How the memorandum will look, sir? Memorandum will look like this. See, whatever we paid, we are writing to bank, to bills receivable, that is expense, to our co-venturer. Okay, later whatever sales is received, our co-venturer is receiving or we are receiving. So by bank, if we receive, if our co-venture receives, by co-venturer. Finally profit will be there. This profit portion will be transferred here. This profit portion will be transferred to the joint venture. Okay, that's it. Later How about conversion of the consignment business into joint venture, sir? Simple. Consignment business closing, stock we have to value till the date of the conversion of the joint venture, whatever might be the value of the stock. That stock should be transferred to the joint venture business. Later, as usual, joint venture business continues. I repeat, when the consignment business is to be converted into a joint venture business, what we should do, sir? Consignment closing stock we have to value. That closing stock should be transferred to the joint venture. Who will be the sender of that goods? Sender of that goods will be the consignor, because he is the owner of such goods. No, he is the owner of consignment goods. That's it. Only so much in the joint venture account. Hope you understood this. Thank you.